Okay, so we have another exercise dealing with raw data. So let's look at what we have here. Crocker Corporation began calendar year 2019 with stockholders' equity of $100,000, consisting of contributed capital of $70,000 and retained earnings of $30,000. So this would be a good time to review the fact that stockholders' equity is made up of two components. One is contributed capital, and we can define contributed capital mostly as money put into a business. Now, it doesn't necessarily have to be money. Other assets can be contributed capital. Okay, but usually it is money. We won't have any examples where an owner, donates a truck or something like that as an asset, and then we put it on the books. We won't have anything like that. So, contributed capital $70,000. If you were to open up a business and you took $70,000 of your own money to do so, that would be contributed capital. Okay, and then retained earnings of $30,000. So again, a review of retained earnings, and you'll see this as we work through the problem, is simply the amount of earnings for a business all time that are retained and not paid out via dividends. Okay. So and then it says further information. I am right here. It says during 2019 it issued additional stock for total cash proceeds of $30,000. It also reported $50,000 of net income, of which $25,000 was paid as a cash dividend to shareholders. So we're going to use that information to update and formulate a statement of stockholders' equity. So we have talked a little bit about the statement of retained earnings, and so this is the statement of stockholders' equity. And the statement of stockholders' equity is actually a better financial statement than retained earnings statement, because it basically has a retained earnings statement embedded within it. Okay, so it says that it was at the beginning of the year. We have these figures here. Well, look here, December 31st, 2018. Now, that's obviously the end of the previous year, but then we fast forward one day and we have the beginning of 2019. So we can just plot these numbers in there. Contributed capital is $70,000 at the beginning of 2019, end of 2018. Retained earnings was $30,000. And they give us total equity, but if they didn't, we could just add these two together and come up with $100,000. They also issued some additional common stock. This is what we're talking about when we talk about contributed capital. The owner puts in, again, usually cash. What do they get in return? Common stock, sometimes called capital stock. So in this particular case, there was an additional, $30,000 that was put in. Okay, so we're going to add $30,000. Okay, and we are also going to have $50,000 of net income. Now notice that I am placing this $50,000 over here because we had earnings that had been retained of $30,000. We have an additional $50,000 of net income, and if we were to retain all of that, okay, well then we would have $80,000 of ending retained earnings. But that's not what happened because we paid out $25,000 in cash dividends. Okay, so what we have now as far as contributed capital is $100,000. Retained earnings is now going to be 30 plus 50 is 80, minus the 25,000 here that we paid in dividends. So we have 55,000, and then our total stockholders' equity is the 100,000 in contributed capital plus the 55,000 of retained earnings, for a total of $155,000. And that is all there is to this question. We'll close this out and move on to another video.